Yeah, in this video, let us look at some generic interpretations of Ichimoku. So far what we've done is we've just gone through the very basics of Ichimoku and as well as the components of it. Now, these interpretations are basically how you can read those different components. Okay. So before we go into each of those components and interpretations based on those, let's start off with the very basic ones. So the first thing that you need to kind of look for is the cloud, and the cloud would actually give you three zones. Okay, the first zone is the zone above the cloud, and the zone above the cloud is bullish, and if your time frame is higher, then it is a stronger representation of the long-term sentiment in the market. Okay, and any buy signals that is generated here are strong, and any sell signals generated here are weak. So the zone above the cloud is bullish, and any bullish signals are strong here, and any bearish signals are weak here. It's a very simple logic. Similarly, the zone below the cloud is bearish, and the buy signals in a bearish zone is weaker, and the sell signals in a bearish zone are obviously stronger. The logic is very easy to understand. I think that's the first thing that you need to look for when you see a chart with Ichimoku. Now the cloud itself is a no trade zone. It is the zone of equilibrium. So the entire play in stock market is based on demand and supply, and what Ichimoku tells us is that the cloud is that zone where the demand is almost meeting supply. So that's the zone of equilibrium, and that's a no trade zone. So if we were to look at the same thing in our chart here, let's take off everything else. Ding, ding, ding. What is that? Okay, and let us remove the price line as well. Okay, so this is conversion. Wait, conversion. Okay, conversion line. So and now I delete this after making the correction. Fantastic. Okay, so what are we looking for? We are looking for bullish and bearish zones. So if I look over here, this entire area here is your bullish area, and this zone here is your bearish zone, and these zones here and here and here and here and here, sorry, I'm wasting time. These zones here are your zones of equilibrium or your no trade zones. Now again, I'm reiterating that the most important component in a cloud is your span B, and that is the strongest support, strongest resistance. It is the strongest level of making any kind of trade, be it a bounce of this, or be it a bounce this way, or a breakout this way, or a breakout the other way around. So anyways, but the cloud gives you a first representation of the current market sentiment. So if you're looking at a 15-minute chart like we are, this is your short-term sentiment, and maybe if we actually move that to 1 hour, 4 hours, so if I'm looking at 1 hour over here, it looks like it's turning tables and it's becoming a little bullish, but if we look at 4 hours, it's still bearish. One day this is your bearish and this is your bullish region, and so don't think too much into it at this point in time because we're just learning it. So all you need to know is any area above the cloud is bullish, any area below cloud is bearish. All drawings, how do I delete all drawings? Delete all drawings. Okay, so so what did we actually just discuss here? Discuss is bullish zone. All buy signals are very is a very strong word. Okay, all buy signals are strong. All sell signals are weak. Excuse me. Okay, and the same goes over here. Copy paste. Bearish zones. Sell signals are strong. Buy signals are weak. Now, what do you mean by buy signals and sell signals? I will explain in the next slide. But this is a fairly easy thing to understand. And the last, of course, I forgot, is your no trade zone. Okay. And the other thing that I wanted to mention in terms of buy and sell signals, any buy and sell signals that happen within the cloud are called neutral. So it is not as reliable as the buy signals in bullish zone, but it is not as weak as the buy signals in your bearish zone. So it's a neutral signal over here. You can consider trades based on signals within the cloud as well. Okay, fantastic. So that's the zones. Very important to understand. The very first thing that you must see. Okay, I think this is perhaps the most important slide in our entire presentation, apart from the strategy, of course. And this is nothing but what I discussed a little earlier on, maybe in some other previous slides, and I'll get back to it. The first thing that I said is that we have to use the rules of trading with moving averages. So moving average crossovers, the faster moving average crossing above slower moving average is your buy signal, and vice versa is your sell signal. If the price crosses above the moving average, it's a buy signal. If price crosses below, it's a sell signal. If the price bounces off the support of the moving average, it's a buy signal. If bounces up, that is, it's a buy signal. If the price is coming from below, it bounces and goes down, it's a bearish signal. So same logic we use here, and we say the two things that we're looking for is moving average crossovers. So what are all the moving average crossovers that we can actually find? Let me delete. Okay, and let me get everything back. Lagging line, yeah, lagging line too, why not? And this one too, and then I make that a candle. There you go. So this is how it looks like. What are all the signals? Okay, so let's look at first signal between the 9-period moving average and the 26-period moving average. What do I mean by that? The conversion line and the baseline. You see a signal over here, correct? What signal is this? This is a bearish signal. Okay, what else do you actually see? Where else do you see here? You see a signal over here. It's a bullish signal. Okay, you see two signals over here. This is a bullish over here, and the very next candle you see a bearish signal here. Where else can you see? There you go. This is a bullish signal. Again, any indicator or indicators on its own is not an accurate representation. For example, this, if you look at it, is is a bearish signal in a bullish zone, not necessarily the most important or the most strongest signal. And if you really look at it, I think the signal came when we were here, or perhaps somewhere over here, and the price is still somewhere around that even after so many candles. So it probably was not a great signal. This is a neutral signal. It came over here, but it still actually went through. This, I'm not even discussing that because that's false. This is a bullish signal in the bullish zone, and it was in fact a good signal. It went up this much from 9,900 till it went up to 11,170. So which is obviously a good signal. Not always, it's not always the case. It's just that these signals, you can rely on these signals more than the other signals. There's one, this is a bearish signal in a bullish zone and it never really clicked after that. Not necessary, I'm just giving examples, that's it. Okay, so the first signal that you are looking for is a conversion line baseline signal, and I've given you several examples here of the various signals that you can see from the Ichimoku cloud itself. Now, I really hope I don't have to hide everything else to kind of give you those signals. So that is one. So let's go back. Moving average crossover signals, which is conversion line cross above baseline, is a buy signal. Okay, span A cross above span B. Now, just by looking at this thing, I can tell you this is nothing but the cloud turning from red to green, because span A is one edge of the cloud and span B is the other edge of the cloud, basically. So when the cloud reverses or the cloud twists, it's called a cloud twist. The cloud twist is another indication. So going back to our scenario, there you go. There is a cloud twist from bullish to bearish, from green to this thing. So span A actually came down, so cross below span B. If I look at the other indication over here, this is a bullish indication. This is a bearish twist. Ta-da-da. Wow, this is a super bullish twist. Here you go. This is a bearish twist, and there are quite a lot of those here. Bullish twist. So quite a lot of indications about trend reversals. There are certain occasions where it will be false, but you get to know well ahead, because by this, once this twist happens, by the time this twist happens, it's not 26 periods, so you would have actually covered for it. There may be others also which are false signals. So just by a Kumo twist or a cloud twist, you will not be able to kind of make a trade. It's just an indication, and you just have to ensure that there are like several such indications that come together, which gives you a more comprehensive signal saying that it's a buy or a sell. Okay, so yeah, so that is the second interpretation. So whenever a span A cross above span B, buy signal. When a span A cross below span B, it's a sell signal. Now the next one is your baseline and your span B. What is your baseline? It's 26 period moving average. Span B is your 52 period moving average. So these are the two strongest moving averages crossing each other, which can be a very good indication. So again, I'm not going to hide the other factors. You just have to look for it. You have to look for it to try and see whether you can see any. So recently this happened, which is your span B cross below, or rather baseline cross below span B. For a long time that did not happen, which means that it was bullish for a long period. And before that, what happened? It was over here. This was the other area when the baseline crossed above span B. That was a bullish signal. And if I were to tell you that if I had bought when the baseline crossed above and then was waiting to sell when the baseline crossed below, then my profits would have been 8,300 till 10,500, let's say. That's your profit that you would have actually had. So definitely, span B baseline crossover is very important. My experience tells me that you should not be just trading based on it. You should not be trading based on it, because these indications come a little late. But these are indications that would help you excuse me, validate your trade. So if you had made a trade somewhere before and then later on this happens, wherein this crossover happens, it validates what you've been looking for. It validates your trade. So once this happens, you know that you're in the right trade. Continue. So at this point in time, if I'm looking at a day chart, this is Nifty and this is today. It broke over here. This was my buy price, or rather sell price. This is where I sold, and not there actually, the next candle. So this is where I sold, and it came down till here, then retraced. Looks like it retraced, and then the crossover we saw, and then now it's actually going back down again. This this probably is a one of the key levels of support. And when I say there's a key level of support, if this was a red cloud, this probably wouldn't have been, you know, a good support, because this shows as a supply zone. But in this case, this is a green cloud. So basically what it means is that there has been a lot of buy from this area. This is one of the latest demand zones. You know, this is one of the latest demand zones, and therefore, and if you look at it, there's been a lot of buy from here. There's been a lot of buy from here, you know, this area. So this area is now a demand zone. So I'm really hoping that it actually comes down here and then goes back up. But because of this major negative, you know, indication, I have a feeling that it may go down to either it may actually bounce just a little and then may go down, or you can look at other levels like this or this in future. Okay. Excuse me. So that's the second indication. Let me take everything off. Sorry, third indication, baseline and span B crossover. So in this case, we've seen a baseline crossover below span B. So that's a definitely a sell indication. So then the fourth one is your lagging line. Lagging line is nothing but your CMP, which is plotted 26 periods behind. Now, if your lagging line crosses above cloud, it's a buy signal. Lagging line cross below cloud, it's a sell signal. Okay, so in this case, the lagging line has crossed below. When it crossed here as well. It crossed here, then rebounded, and then crossed again. So it's almost like the retracement is over and it's crossing down again. So this is a huge sell signal. Okay, this is a huge sell signal. This was a minor sell signal over here. Okay, and this was a sell signal over here. When the price is actually breaking out of the span B, your 52 period span B. So there's a lot of sell signals over here, which makes me a little bearish on Nifty. Nevertheless, let's see how this works. Okay, forget all the analysis. Going back into the basics. So you have your lagging line, cross above cloud is bull signal and cross below is bear signal. In this case, it's cross below, so it's a bear signal. Okay. Now the comparison between crossovers between price and moving averages. Till now it was between two or more moving averages, but here now it's a comparison between price and moving averages. So when the lagging line crosses above price, I've already explained this, that the lagging line is nothing, it's just comparing current price with what it was 26 periods ago. Therefore, if the lagging line is above the price or crosses above the price, that's a good time to say this is a buy signal. Similarly, when the lagging line crosses below price, it's a sell signal. Like, let's see. I'm deliberately keeping all the other components also. I don't want to kind of just add this thing, because you need to start learning how to check these when the other indicators are there too. So this is one place where the lagging line crosses. Another area where lagging line crosses price. Another area where it crosses price. Another area where it crosses price. In several areas like that, kind of where it crosses price. So yeah, so these are other indications that you can actually look for with regards to lagging line and price. Okay, so that is one. Then price cross above baseline, which is a little stronger, I think. Price crosses above baseline. Why? Because baseline is the second most strongest support and resistance in Ichimoku. The strongest being span B. So anytime the price crosses below baseline, it is a bearish indication. Okay, and if, I mean, I don't have that here, but if that crossover happens here, it bounces off baseline, which is equally relevant. It's come up, it's taken this as a support, and it's bouncing off. That's an equally relevant indication, because like crossovers, taking support is also an equally relevant indicator. Okay, so these are the other things that you need to kind of definitely look into, especially with relation to baseline and price. Okay, and then you have to compare price with cloud. So, and when we say cloud, you take cloud as a whole, mostly because if it's bouncing off span B, then make sure that it goes above the outer edge. But if it is crossing, then you can take it immediately. So when price bounces off and goes off, then it's a bullish indication. But if it crosses and comes below, then it is a bearish indication. So in this case, it's crossed below the cloud, the price is crossed below the cloud, and therefore it's a sell signal. So we've got our sell signal here, we've got a sell signal here, we've got a sell signal here, we have a sell signal here, we have your sell signal here, we have our sell signal here. What other sell signals are there? You can look at other signals also. So like for example, your lagging line crossed below baseline could be another sell signal here. Your baseline crossing below span B, which is a very strong sell signal. So I can see a lot of sell signals over here. So even if it retraces a little Monday, I think I am more bearish on this than bullish. Okay, that is that. What else? And you have to understand this is a day chart, so it may not actually happen for intraday. It has to happen over a period of 1 week or 2 weeks. Okay, so this is the next part. So like I mentioned, this is very important for you to understand. Please keep practicing this. Take a printout of this thing, go to the charts, start observing each of those things, start observing as many as possible, and see where all these indications come together. What are the combinations that work? What are the combinations that may not work? Okay, so okay, this is the last part of this video, and basically it's something that I've always mentioned throughout my other the previous videos as well. But so I wanted to say that from a moving average point of view, 52 period span B is the strongest support or resistance line. The 26 period baseline is the practical support or resistance line. The span A is your first level of support or resistance, but it's more of an indication than anything else. And your 9 period conversion line helps us get first indication of a trend confirmation or a trend change. The area between span A and span B, the Kumo or the cloud, this is the area of equilibrium, and this is also the no trade zone. Any price breakouts above or below this is a good trade opportunity. Okay, a combination of all these things would help you define support and resistance levels, identify trend direction, gauge momentum, and provide trading signals. So this is what I wanted to kind of show in this particular video. I'll stop this video here, and we can actually go into the strategy in our next video.